Welcome to Influential Entrepreneurs, bringing you interviews with elite business leaders and experts, sharing tips and strategies for elevating your business to the next level. Here's your host, Mike Saunders.
Hello and welcome to this episode of Influential Entrepreneurs. This is Mike Saunders, the Authority Positioning Coach. Today we have back with us Judy Carlson, who is a fee-based fiduciary financial professional, and we're talking about risks to the safety of money that could derail a financial plan. Judy, welcome back to the program.
Thanks, Mike. Glad to be here.
Hey, so I always like to learn about risks and how to avoid them, and I don't want to derail anything, so let's jump right into this topic because I want to learn how to not derail and mitigate risk. So there's a lot of risk out there on our money, and it's not just from people stealing it or things like that. So let's talk about that. Get us started on kind of your passion and focus on helping saving family money and helping them with their retirement.
Right. Yeah. All about protecting the money we've got. Right, Mike?
Yeah. We worked hard enough to get it. Now let's protect it.
Yeah. Not exposing it to all those risks. Well, there are a lot of risks to the safety of our money. Some of them are more important in wealth accumulation. Some of them are more important in wealth decumulation. But obviously we know about market volatility because we're facing that as we speak today. And there's a lot of others, but the one I really want to focus on today with you, Mike, is taxes. It's something that we all pay from our first paycheck, and most Americans are paying taxes up until the day they die, and then once they pass away, someone else is paying the final taxes, final tax returns. So from 20 to 90 or whatever, 70 years, it's out there. It's what we have to do. And quite frankly, it takes a lot of planning if you don't want to be one of those that gets derailed by taxes, especially when you slow down or stop working or go into retirement or wealth decumulation.
And it's interesting that you say wealth decumulation because that's a curious word because a lot of times we think about wealth accumulation. Let me make money, earn money, put it away, save it. Where's the best place to put it to accumulate? But there comes a time at certain ages where you need to start decumulating or, distributing it out. And that's a whole other realm. And it's kind of like you're taxed on the way up and you're taxed on the way down and out and every which way. And you can't avoid it, but you can optimize how you're taxed or pay as little as possible. And so if I remember correctly, I hear these stats like the tax code is 70,000 pages or 80,000. I mean, it's just monstrous. You probably couldn't even pick it up if they printed it off and put it into a book. So there's no way that the normal person could know the tax code. So you are a CPA. You have seen many tax returns. Let's tie that kind of mindset into what have you seen in the past? Talk a little bit about taxes. How do you work with your clients on helping them understand their tax burden and how to manage that to the best of their ability?
Great question. Yeah, I'm thankful that I've been a CPA for 40 years and I don't mind the 70,000 pages, but I can't say that I've read them, but I know there's unique, places in the tax code that are very important for me to help my clients understand. And I have seen a lot of tax returns over the years. And one thing that really struck me recently was the downward spiraling tax cycle that many retired people get into, simply because they didn't have the knowledge or education prior to retirement to know specifically how taxes were going to impact their spendable cash flow in retirement. For example, the 1040 is the place it all lands, right? So we all file our 1040s, and even after we retire, if we have income, it all lands on the 1040. So for instance, if you're taking distributions from a tax-deferred retirement plan that hasn't been taxed yet, that's income on your 1040. If you're getting gains from invested assets, that goes on your 1040. Social Security benefits. There's a lot of things that hit the 1040, and as a result, you're paying taxes on all that income, and you've stopped working.
Yeah.
So
And you don't have more coming in. Yeah, so the bucket has holes going out, but it's dribbling coming in.
Right, right. People are unfamiliar with how much of their retirement income is actually going to go to Uncle Sam once they're retired. And so what I help my clients do prior to retirement is understand some of those tax code implications once you are retired, so that earlier in the process, say even during wealth accumulation, you've got a plan laid out so you've got clarity and confidence about exactly what is going to happen to my money, especially tax-wise, once I do slow down or stop working. And it's really interesting is people say, well, I'm going to work till 80. Well, that's fine, but if you have tax-deferred money, the IRS is going to come after those distributions in today's tax code starting when you're 72. So now you're not only earning income that's going on your 1040, you're required to take those distributions
to take even more.
That are also hitting, and the tax burden just continues to grow.
So those things sound like surprises, similar to when you first start working and you get your first paycheck and you're like, what are all these deductions? Oh my word. And it's like, you can't do anything about that on the front end, but on what you're talking about on the back end, the decumulation phase of things, you can certainly plan for, make moves ahead of time, understand so that you do know it's coming, but also understand what could come and then what you could be doing to make sure that you pay as little as possible, legally, ethically, morally, all of that.
Correct. And it's interesting because most people are saving money into some sort of a tax-deferred plan, whether it's their company 401k or they've set up a traditional IRA or their own SEP plan or they're a 403b. There's a lot of them out there, and it's pretty much what everybody does. So that's what everybody does, right?
Yeah.
But they haven't peeled back the onion far enough to understand the implications of that financial decision on what's going to happen in their retirement years. And if they're putting money away into these plans, it's the good old compound growth principle. The money's compounding, but guess what else is also compounding right along with the money? It's the taxes you're going to owe on the money.
Well, and because it's a bigger number, and you get excited because it's a bigger number, right. But also, and this is kind of like the age-old, question. Hey, you're 42 years old right now, and when you say you want to retire at whatever age, 72, 62, whatever the age is, do you think the tax rate will be higher or lower? And obviously, people are like, well, I don't know, but probably it's going to grow because you look at our deficit that grows every second, and how are you going to close that deficit? You're going to get it. The government's going to get it from taxes. So we don't know, but you can only assume that the tax rate will grow. And if you have money in qualified plans, it's growing. So when you take it out, it's going to be taxed harder. So that makes me think should you not put money into those plans, or should you put money up to a certain, like if your company matches, should you only put it up to that amount and then do something as an alternate?
Right. Those are very strategic financial decisions that I help my clients understand as we move through the process, no matter what age they are. And we can show them, what is this going to look like given certain scenarios, and what kind of a lifestyle do you want to live post-retirement? And if taxes cut into that a fourth or a third, is that the way you want to live those golden years, so to speak? And so very strategic analyses and understandings in order to help people understand what those implications are.
And it's different for everybody. You can't say, oh, well, here's the formula, do this, because everybody is going to be different. Have you worked for a company for 40 years? Did you work for a company some of the time and then start your own business? So it's going to be very different.
It is very different. And it depends on when in their career journey we catch them and help them, look at potential alternatives. Like you said, maybe you want to contribute up to the match. Well, then what would I do with the rest of the money that I might want to save? Well, the key is we need to pay taxes on the income that we earn. The big question is when do we pay those taxes? Do we pay it when we earn it, or do we pay it sometime down the road at an uncertain date and an uncertain rate?
Yeah. Well, I know I like predictability and know what to expect, and I don't like at an uncertain date and uncertain rate. So, how do you maybe, if someone wants to have a little blend, is there another way in addition to, or once you've met your own predetermined, I'm going to contribute to an IRA up to this, or 401k only this amount because the company matches? What is another alternative that would be good that would help them out to achieve some of these goals?
Well, this won't surprise you, Mike. It's a little known section of the tax code.
Hey.
Yeah, it just keeps coming back around. It's just most people aren't familiar. I mean, 401k is a tax code section, and so is 7702, and that happens to be a tax code that allows you to put money into certain forms of cash accumulation life insurance, and it's a tax-free asset class. So you put in already taxed money, and from the point it enters that particular asset, it grows tax-free. You can take tax-free distributions. Oh, by the way, it comes along with a tax-free death benefit. So there are a lot of other benefits that come along with it. And it's been around since the tax code started. The tax code went into effect in 1913. This has been in the tax code ever since 1913. And the top 1% of the people in our country have known about it for decades and have made great use of it. So it's
I sure like the sound of, here's this brand new thing. It's my idea, and I know it's going to catch steam. So you want to be one of the first people to do this? No. But something that's been around since 1913, and the top of the top people that have done it. And I know that I think I've heard rumor that people like JCPenney and Walt Disney use this kind of thing. So it's like tried, true, and proven. And you mentioned like 401ks have their section of the tax code, and IRAs, and it's interesting, like there's certain caps, and I don't want to get into ages or numbers or percentages, but I know that if you did a Roth IRA, you can put already taxed money into that, and then it grows tax-free because it's already been taxed. But there's limitations to that. So once you cap out, if you choose to do an Roth IRA, at some point you can't put any more in because of your personal limitations. So this could be a great additional piece to your portfolio. So what are the reservations people typically have? Because I think when people hear the word life insurance, they're like, oh, I've got enough, I'm good. But you're thinking about term life that you bought 10 years ago, and it doesn't do much, and it's when you die, it's going to pay for something. But we're talking about a whole different vehicle.
We are talking about a whole different vehicle, Mike, yes. And there are certain forms of it that are built for living benefit strategies. And most people say, oh my gosh, that's a huge amount I have to pay for a permanent death benefit that I'm never going to be able to make use of. It's just for my spouse, my kids, my beneficiaries, whatever that may be. However, these certain forms of strategies give you benefits while you're still alive that are way beyond the investment side of the financial services equation, which is what most people are familiar with. So venturing across the bridge from what they know about investments into something that's more unknown, like the insurance side of the financial services business, can be very scary for people, and it is an unknown, and that's part of why I spend a lot of time educating them and showing them how they work. For example, if you have enough cash accumulation inside certain forms of these contracts, you can take loans against them, not loans from them, so you continue the compounding. The biggest thing is uninterrupted compounding, and then you can take those loans and invest in things. Maybe you want to invest in stocks or a startup, or purchase a second home, or send a child to college. There are so many things, and you're not just sending your money off to a college, for instance, never to be seen again in your financial portfolio. So those are just a few of the benefits that come along with them. And in retirement, it literally helps you move outside of that downward spiraling tax cycle that I spoke about earlier.
Yeah, that's a good point, because that's when money becomes that much more valuable. It's one thing if it's like, you're at the height of your earning and you're making whatever your amount and money's coming in, and then it sometimes it's like, oh well, we lost $100 on this thing. We didn't cancel our reservation in time, so we lost $100, and it's sometimes people are like, yeah, okay, no big deal. But if you were making, $400 a month on Social Security, that $100 now is a lot. So what you're mentioning to people in their decumulation years in retirement, every dime, every dollar, every penny counts. And if you can defray or reduce or mitigate taxes and put it in a vehicle that gives these kind of benefits from accumulation to access, to me, also, like if you got a bunch of money tied up in CDs, it's like, you got to pay a penalty in. But if it's in this kind of account and you can access it and it's liquid in a sense, that's a really big benefit.
It's liquid, accessible, it's under your control, so you don't have any of that panic, especially if people have been putting money into a tax-deferred plan and they're not 59 and a half yet, and they have to pay a penalty plus the taxes to access it, and life happens, and they don't have any other place to turn to. They go to their tax-deferred plans, pay the penalty, pay the taxes, whereas had they had a portion of their savings in a vehicle like this, they can get through the hard times with continuing to make mortgage payments and handling that life event that came into their lives without derailing any of their finances.
That's huge. That's a big win. So let's get this wrapped up here, Judy. We tied taxes and how that is a outflow, and you need to keep an eye on that, and then also making sure that you have a properly structured cash value life insurance policy that gives so many of these benefits. Wrap it up with how could people think about this as a piece of their retirement plan so it doesn't derail that, and then what's the best way people can reach out and connect with you and learn more?
Yeah, I love one-on-one education with people, and this is a passion of mine. It helped me 8 years ago when I was in a very difficult situation myself, and had I not learned about them at that time and saved some of my money into them, it would have derailed not my retirement plan, but my life financial plan. So that's one of the reasons I'm very passionate about it, because I'm a living proof of what they can do to help people. So I have a lot of resources on my website. My website is judycarlson.com. There's also a resource that's a book called Taxes, A Big Risk to Your Retirement Lifestyle. That's very helpful information about how to tie tax-free retirement distribution into your portfolio. So those are some ways to reach out to me, and I'm happy to do Zoom chats. If you just get on my calendar, that would be great.
Well, Judy, as always, it's so great talking with you. You've got a great, fresh perspective that brings clarity to some of these topics that tends to be pretty cloudy for people. So thank you so much for coming on. It was a real pleasure.
Thank you.
You've been listening to Influential Entrepreneurs with Mike Saunders. To learn more about the resources mentioned on today's show or listen to past episodes, visit www.influentialentrepreneurssradio.com.